Hey, yo, Vijay, can you guys hear me? Just a quick audio check. Hey, yo, Vijay, can testing, testing. Okay, cool. So, uh, thanks for joining in today. What's up? Welcome to Crypto Mambos. Today is just a very simple, really basic, technical analysis introduction for the newer traders here. What I'll be covering, uh, what I'll be covering mainly is price action, how to identify trends, and some candlestick patterns. And we also cover a bit of supply and demand. Supply, demand, or what we call support resistance zones. Okay, so firstly, let's start with price action. So, we start with candlesticks. So candlesticks is actually one of the most often widely used charting sort of tool or visual that traders use, because candlesticks not only tell you the fluctuation of price, they tell you the highs, the lows, and open closes. So all these are candlesticks. So let me just show you guys. Okay, so this is the candlestick body. Then we have a wick on the candlestick. So what we have here, right, is the candle. Let me just. Okay, so this is what we call the candle open or close depending on the color of the candlestick. So let's go with a red candlestick first, which is a a candlestick where price is moving downwards as shown here. So for a red candlestick, this level here actually shows the opening of price, while this level here shows the closing of prices, right? Which means to say, when the candlestick opened, for example on the 15-minute time frame, the first second it opened here, then as time goes on it push, and on the 15-minute mark it closed down here, hence becoming this sort of candlestick. But it's important to note that actually 85 to 90% of candlesticks have both top and bottom wicks. As you can see here, top bottom, top bottom, top bottom, top bottom. So these are wicks. So what are wicks? Wicks are price fluctuations, as it shows us the high and the highs and lows of a candlestick. So as mentioned, let's say this is a red candlestick. This is the opening price. So prices open here, right? Open here. Maybe prices pushed up. Buyers are trying to push prices up. Push, reached here. Not enough strength. The bears come and push it back down. So prices flip and go back down all the way. All the way down. Then the bears push back a bit more. So price close here. So we are left with the wick here and here. This is the high, this is the close. And very often you can see these prices by just hovering over the candlestick on TradingView. You can actually view it here. OHLC, open, high, low, close. So for example, on this candlestick, this red candlestick, we have opening of 30k, 30.129k, closing of 29.648k. So this is 30.129, this is 29.648. Then we have the highs and lows. The highs here is 30.242, the lows is 29.555. So this is for a red candlestick. So for the green candlestick, the opposite is true. So for a green candlestick, prices go up, right? So in that case, now this becomes the candle open, and this is the candle close. So candle opens here, prices go up, maybe, and then get pushed down, then push back up, and comes back down. So this is open, this is candle close. The highest point of this candle, the lowest point that this candle has reached. So as long as closing prices are above opening, the candle is green. If closing prices are below the opening price, then candle is red. So this is candlestick, or this is how to view a candlestick. Yes, so it can fluctuate in many different ways. So but this is essentially what it tells us. So now we'll go into so that's how you read a candlestick and how you see prices move. So for example, on this candlestick here, this green one right here, we have prices opening here, then prices got pushed down, but the bulls came back, pushed back up slightly, and down a bit more, and close. So we are left with a wick like this here. Right, so this is just one example. So next I'm moving on to how do we identify trends. Okay, so how do we identify trends? So there's one thing to note, which is market structure, which is very important in trading. So we should note that on an uptrend, prices move to create a higher high and a higher low. So one example is right here. This is actually an uptrend, a higher high, low, higher high, here, a higher low, higher high, higher low, higher high, higher low. So this is an uptrend. This entire process is prices moving up. So next we have downtrend. Downtrend is lower highs, lower low. So an example of downtrend would be this section right here, or actually this whole section here, or generally the overview here. So here is the first starting point, low, high, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So this is an entire downtrend. So it's very important to understand how market structure works, because it helps you to identify the trend. So when it's on an uptrend, you generally want to look for longs or trade it upwards. When it's on a downtrend, you want to trade it downwards and look for shorts. So as a general rule of thumb, right, you can use the 200 EMA indicator to just tell you whether you should look for long or shorts. So personally for me, if prices are under the 200 EMA, I generally look for shorts more than longs, because as you can tell, as long as prices are under, the price generally goes downwards, and all the green sort of candles are retracement back upwards or trying to break resistance. But you will notice that the 200 EMA acts as a resistance quite very often. So here it comes up, gets rejected by the EMA, rejected, comes up here, cannot hold, come back down, rejected, tap here, tap here. Yeah. So the next time prices come back up, right, and the EMA is coming down here, it most likely will get tapped in, come back down. So that's how we actually identify trends. So other than identifying such trends, yeah, so by knowing when the market structure actually changes, right, then you can actually tell, okay, by knowing market structure, you can tell when market structure will change or is likely to change, because from there you can change your position to look for a new one. Like if you went long and prices start to slowly shift to a downtrend, then you should be looking for shorts. So for example, prices on an uptrend here, right? So you see low, high, low, higher high, higher low, higher high, higher low, higher high, higher low. But this green stick here, this green bar could not create a higher high. So what does that mean? When a higher high cannot be formed, right, that tells you that the uptrend is in danger, and that it can be potentially a change in market structure around this point. And it became true because a higher high could not be printed, right? So prices went back down. It still printed a higher low. Then this green candle tried again, but still cannot print a higher high. So from then on, market structure changed to a downtrend market structure. So it started to go down, lower low, lower high, lower low, lower high. Let me just show that to you guys. Lower low, lower high, 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 lower low. Then at this point, it suddenly printed a higher high. This high is higher than the previous high. So what does this tell us? Market structure is changing again. So at this point, it printed a higher high. It took away the downtrend market structure. It came back down, and then it printed a higher low as compared to this low. And then the market started to move sideways like that, because it's slowly changing the market structure. And then boom, high high, high low, high high, high low, high high. So it became an uptrend and got dumped. But in today's market, right, like right now, the market is pretty volatile. So these market structures aren't as easy to tell or aren't as easy to trade. In general, it's very hard to trade during this period, as prices are moving, spiking, dumping, pumping very, very quickly. You can see that random green candle pumped right up, a sudden dump here, green candle pump back up. Yeah, so this environment is actually very, very, very hard for the newer traders. You might want to stay out of trading for this period until it settles down, because even veteran traders, they do have some sort of difficulties trading because prices is just jumping around and bouncing around. So if you start now, you can just try your hand in it, just a little amount, but don't go too much, don't be too greedy, don't go all in. And just because you did one good trade does not mean that you are very good at trading, because it might be a stroke of luck, it might be just you happen to get lucky. So what happened for me was, when I first started trading, I thought I made a really good trade. I earned like $150 in like 2 trades, and I thought like very good. I thought I was a god, but turns out I lost like 500 after, because I wasn't respecting market structure. I wasn't trading to trend. I simply got lucky. Yeah. So don't use too much money first. Practice paper trade if needed, and yeah, can go from there. So lastly, in this so from understanding candlesticks, you have price action, right? Then we have market structure to identify trends. Lastly, we have supply and resistance zones. So what are supply and resistance zones? As you can see here, S means supply, S means support, R means resistance. So support and resistance zones are zones that generally price tends to bounce off. So for a resistance zone, price bounces downwards, whereas as a supply zone, price bounce upwards. So for a supply zone, it's also called as a demand zone. When price reaches the area, buyers will buy to push price back up. And for resistance zones, price is in a supply area where price reach there, people sell, provide supply, and price goes back down. So how can we use this to trade to our advantage? So for example, in this example, right, price came down to a demand zone, a support. So when this candle reached here, buyers bought it up, prices pumped, then price slowly came back down again. But this time, price broke through support, which means to say way more people sold than the number of buyers at this price level. So it made prices tank, and the moment a support level breaks, prices are likely to tank further, which is proven by this candle that this red candle which dropped the prices even lower, and then one small green candle and prices drop even lower, because support is lost until the next support is reached. So there are there are many multiple support levels at different points in the price and charts. Same for resistance, many there are different resistance zones. So you can see this entire red box here, right, is a supply zone, supply area, and a resistance zone. So you see prices came in, people sold, come back down. Came in, people sold, come back down. Came in, sold, come back down. Okay, for this green palm, right, it's likely that buyers overcame the sellers, and once price managed to close above this point, right, a local squeeze happened, a mini short squeeze, which means to say the sellers that shorted here closed their position by buying back what they sold, because this is futures trading and there's leverage included. So for a short position, sellers borrow from the broker to sell and buy it back to cover back once the trade is done. So sellers got overcame here by the buyers, and they sold their positions, and prices pumped back up. But in the end, prices couldn't sustain here, because eventually sellers still overcame. Prices came back down, rejected again, rejected again, rejected, 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 rejected. So you can see this entire area is a whole supply zone that price couldn't break above. Okay. Then after being rejected too many times, the buyers sort of gave up. Not say gave up, but the bearish sentiment took over, and more people turned to selling. And as mentioned just now, you see, once this red candle closed below the support zone, it means support has broken, because sellers overcame buyers. And once it's broken, prices are likely to go further down, as shown here. Went down, 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 bounce, down, 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 and continued down further. So there are multiple levels. And how to identify a valid support or resistance zone? We can identify it through minimally 3 touches. So for example, in this case, right, prices touch once, twice, thrice. This mini one is the 4th time. So at this point, right, I already know that this entire zone is a resistance zone, and it's a very thick one, because you see price can come in all the way here to get rejected, can come in here to get rejected, can come in here to get rejected. At different price levels is getting rejected. So this entire area is this entire price level is a zone. So we can see here also prices got bounced off once, bounced off twice. These two it nearly touched, but it bounced off as well. So we can say that this is a valid demand zone or support zone as well, this area here. Right, so this area is a support zone where prices bounce. So what I usually look for is minimally 3 touches. So like this also, you can see here 1 touch, 2 touches, 3 touches. So this is a valid support zone. So if you're new, right, it's very highly recommended that you go back to historical data, look at the past charts, try to identify different support and resistance levels. You can start by starting on the higher time frame. Higher time frames, you can start. So for example, you see on the daily chart, right, you see price around here. I see prices bounced off here once, here twice, and here 1 week slightly. So we can say that this is a demand zone or support zone as well, because price came down, couldn't break, buyers buy back up. So this is the level, buyers buy back up, buyers buy back up. And as mentioned, when the candle closed below, is likely to trigger a sell-off. So when prices closed below the zone, a sell-off happened, and this, look at this candle, prices sell off all the way to this black line, then came back up. So same here, this candle closed below and a sell-off happened all the way down, up. The bulls came and pushed it back up. So the wick is telling us that prices actually reached this level. Okay, so there was a sell-off. So that's so you can go to the higher time frames on the daily to first identify. Then you jump on the lower time frame when there are more candles. Try to identify the micro sort of resistance and supports. So first you go on the daily first to get a macro overview on the entire trend and the big support resistance zones, so you can get an idea of where to trade. So for example, if price, so let's say price broke this level, right? Then because price broke the support zone here, here. So let's say today is this day here. When price broke, this day, when price broke the support zone here, we actually want to look for shorts. So we actually go around onto the, this is what date, 8 June. So we go to 8 June, right? So 8 June started here on this candle. So because prices closed below our support zone as mentioned, so we sell, and then we see a sell-off, then we can take profits or whatsoever before price comes back pushing up. And this push back up, right, is the wick right here, is this long wick, because prices push back up. So what happened? So going back to price action of a candlestick, right, what happened was prices opened here, price opened here, sell-off happened, major sell-off, people push it all the way down, then the bulls buy it back up. They buy, pushing price back, buy. It reached up a bit, but couldn't overcome the bears. The bears pushed it back down and closed red. Alternatively, it could be price open and then bulls try to push it back up above support zone but couldn't do so, as now the support has become a resistance, and then huge sell-off, and then some retracement back here, and price closed the red candle, leaving 2 weeks like that. Yeah, So I think these are the three most important things you should know before you start trading: price action of a candlestick, trends, how to identify trends, market structure, and lastly is support and resistance zones, or supply and demand zones. Supply and demand zones. So you can do this practice, slowly go down the micro time frames, identify. If you like, you can actually go to real-time charts, right, as prices is actually moving. Try to predict or try to sort of identify the areas, the resistance and supports. Then you see how it plays out, and that is really good practice, and it's important to practice first before actually starting to trade, because my mistake was actually going immediately into trading without practicing, and that's how I lost a lot of money initially. So any more? Okay, so for those watching, any new questions? Any questions would you like to ask? If not, this very simple sort of beginner TA course would end here with what I feel is the three most important things in trading. The rest like indicators, Fibonacci sequences, they are useful, but not the most important, I would say. Useful, but not the most important. And as a matter of fact, most indicators are lagging and behind time. So only when the candle is printed, then they show you the data. So like Bollinger Bands, RSI, stochastic, all these things, these indicators, you shouldn't be trading mainly on indicators. You should be trading on price action, supply demand, price action, support resistance, and market structure. And then when you think that price maybe is going to go back up to an uptrend after a change in market structure, you confirm it by looking at the indicator. So indicators should be a form of confirmation for you before you enter a trade. So you sort of seek confluence in the different aspects of trading. Then that's when you know that, okay, my probability of hitting this trade is actually higher, right? If you just see the stochastic, or the RSI, it's oversold, I'm buying it, then you could be in trouble because prices still can dump. Because you see this long red streak here, right? Maybe just because the RSI is in the oversold region, right? At this point, then you say, okay, I'm buying it because prices are oversold, it's gonna pump back up. Or the stochastic started to cross, or the MACD started to cross back up because prices push here and it looks like it's gonna go back up. The green candles printed, then you go for a long. You went for a long trade, you buy. And then what happened? Prices continue to dump all the way back down. So if you purely trade on indicators, it's really not it won't be effective at all, because okay, so you see at this point, right? I think this is a good example of supply resistance as well. So this zone here, supposedly a demand zone. So it's a support, prices bounce. Then if you see this candle, right, this red candle, it actually closed slightly lower than this lowest candle here. This candle closed 30585. This candle closed 30590. So this candle actually sort of broke the support zone, I would say, honestly. Then prices tried to bounce a bit, but now the support has become a resistance. So this candle couldn't close back up outside this support zone, and then prices tanked all the way back down. Yeah, so if you see here, MACD cross, stochastic cross, must be a good buy. You buy, you get destroyed here. Yeah, so you have to understand the zones as well, supply, demand. In this case, market structure can't really help you much. Lastly is price action. The rest, you can sort of try exploring like Fibonacci sequences. Yeah, sorry, Fibonacci retracements. Let me find it. I can't find it. Like swing high to swing low, right? Oh, is it not this? How do you work? Oh, okay. So like swing high to swing low. This is the high. Oh, sorry, it was here. Yeah, so before all these candles printed, right? Before all these candles printed, like if you use the Fibonacci sequence for the swing high to swing low, you can actually find levels of resistance and support through math. I'm not sure how the Fibonacci works, but yeah, so like you can see this red line here, it became a resistance zone as prices cannot cross. Yeah, the rest you can't really tell anything because prices broke straight through. S1, S2, S3 is actually support 1, support 2, support 3. It's actually an indicator I'm using, which is pivots. I think it's standard pivot, pivot point standard. So pivot point standard, once you click it, inputs can be Fibonacci, and then from there they automatically print out resistances for you. And it's pretty accurate, I would say. You see the bounce here, the bounce here, bounce here, pivot point here. Yeah, it's pretty accurate. You can do it yourself as well without the help of the indicator. You can just identify using past trends, historical data to identify different support levels and stuff like that. Yeah, this just helps me automate it, but I still do it myself. As you can see, I have my green line here, weekly support, previous weekly low, previous daily low, all these are by myself. Yeah, so it's still important to go and check the charts at higher time frames, chart out, figure out the different zones, the levels. Then you slowly drop down lower and you see where you want to trade in that region. Okay, any other questions? Okay, so I honestly think that Fibonacci sequences is a mental thing. It's sort of like a secret language, you know, a secret language between traders, just because a lot of traders use it, right? And so it becomes a self-fulfilling prophecy. So because all the traders think that Fibonacci sequences is always strictly followed, not say strictly followed, but always used, so they do this, then in their heads they'll be like, oh, this is a resistance because this is a level in the Fibonacci sequence. So what happens is a lot of traders will short here, short to make sure price goes back down because this is a level. But in fact, I think it's more like a secret language. It's because everyone's using it, so it becomes a self-fulfilling prophecy. But I don't think it actually exists. I mean, sorry, not that it doesn't exist, but I don't think it's something that's actually affecting the market. How to get pivot Fibs auto? Okay, so you go indicators, search pivot point standard. Pivot point standard. Once you click it, right? Once you click this pivot point standard, you get this settings. Go to input from traditional, change it to Fibonacci, and the rest it should be there already. Auto 15. The style you can just change it to what you want. Yeah. Any more questions? One thing I would say is that trading is very good skill set and can potentially be very rewarding if you have the perseverance and determination to push through and keep trying. I would say keep trying, but I mean definitely within your own limits, within your money limits, financial limits. So once you can do well in this once you can do well with this skill set, right, you can be just earning pocket money for the rest of your life. After work or whatsoever, in your free time, you can just trade a bit to earn some money. And this not only applies to the crypto market, it applies to stock market, forex market, commodities, whatever. So trading is a really, really good skill, and I highly recommend you to actually practice and really go and study it, because it can be rewarding. And it's not like school, school you study things, but these things you don't actually get to apply it in real life. But trading, right, you can actually apply it and earn money from it. For your better future, for your financial independence and freedom. Okay, so let me quickly share one interesting thing before I end the stream here. So what's happening here, right? To me, I think it's likely a Wyckoff accumulation, where prices came down. If you don't know what Wyckoff accumulation is, you can check the channel, check the Telegram channel. I posted about it before. So what it could possibly be, right, is the selling climax here, followed by an automatic rally, because there was a selling climax, rally up, forming a resistance here. Then prices trade within this range. So between the selling climax and the automatic rally, right, it becomes a range. And then at the mid-range is usually some form of resistance or support as well, as you can see here. So it bounce. So the fact that it could break through the automatic rally resistance is a sign of strength. So when it shows a sign of strength, which means it wants to break out soon, or is trying to break out, but it could not yet. So it came down, break through the support level by the selling climax as a spring. Why a spring? Because it's grabbing liquidity from people that are how do I put this? Shorting, yeah, grabbing liquidity from people shorting the market. Because when prices break down, right, a lot of people think that, oh shit, the candle closed below support, prices are gonna trigger a sell-off all the way down here. So people were short. They short, but prices didn't go down. So when they short, right, there's an increased supply and the buyers are buying it. They are accumulating even more, and they are accumulating much more than the sellers are selling. So when the sellers close their short positions because they realize prices aren't going down, right, they are buying it back. They are buying prices back up as well, because the amount they sold has already been bought. So prices push back. So now the whales have accumulated even more and are holding. Prices came back to range within and meander, and it should break out soon, following Wyckoff accumulation. So this is called Wyckoff accumulation. Let me just show you. Yeah, so as mentioned here, whatever I said just now, right here, you see here, right, selling climax, automatic rally, sign of strength, spring, and it should likely pump. If this is actually a Wyckoff, which I speculate it to be, it should pump, but volume is still not there yet. Yeah, still kind of trash volume, so it might not be as well. But you see here, selling climax, automatic rally, sign of strength, SOS, sign of strength above the automatic rally line right here, then come back down, secondary testing, but in this case it didn't go all the way back down. It tested on the mid-range support, test, come back down, spring, grabbing liquidity at the bottom, come back up, test, and it should go up further. So now we are past the spring. We are testing again. If this actually plays out, we should trade in the upper range. So upper range is between the mid range and the automatic rally resistance line. So it pump back up from the spring, come back up, test, go up. We are supposed to range here, but I think the bulls are not strong enough to push. So we're like in between the mid range, just trading in between here. But we should be trading somewhere here, and we grab our last liquidity supply here, go up, so we'll trade somewhere here, finally go up about this level, because our sign of strength level is here, about this level, bounce a bit more and head up, just pump like that. But of course for Wyckoff, higher, I mean as with all chart patterns, the higher time frame the more accurate. So this is just a 15-minute chart, is what I'm speculating, might not be true, it's just what I'm seeing. But another possibility here is a head and shoulders pattern with a retest on the neckline, right? So all these things are good to practice to sort of identify, see whether you can identify it. This is the head and shoulder, retest on the neckline and pump. But I mean all these are speculations, no one can actually predict the market 100% or 24/7 or get it right every time. If not, that person is rich, or like everyone will be rich. Yeah, okay, so that's all. So any questions? So you see prices are actually pretty strong now, looking pretty good actually. So any more questions? Feels weird to see BTC at 29k honestly, if you ask me. Okay, if there's no more questions, it has been a great 45 minutes. Took a bit longer than I expected, but it was pretty chill. Managed to share about this as well. If this plays out, it'll be really very cool, because I shared it with my Trade Pals group, the mini group, in the afternoon about this, which should make a pretty cool speculation. Yeah. So any questions, you can also drop me a DM on Telegram, a PM on Telegram, a DM on Instagram. Both go by Crypto Mumbles. Yeah, and I'll try to answer as when I'm free as best as I can. Okay, if not, all the best to your trading journey. It's gonna be challenging. It's gonna be tough. I'm still learning as well. There's always so much things to learn. I'm also slowly improving my trading game. Yeah, so it's a long process. Take it slow. Don't stress yourself too much. There's gonna be shit days, trash days where you just lose and lose and lose. But keep your head up, and you can come back. You can definitely make it back. So don't worry about it. Oh yeah, and down here, right, just a little small bonus. as I shared just now on market structure, we are currently on a mini uptrend. So if this continues, we should break out of this resistance. As long as price don't go below this low here, we must not print a lower low than this low. Yep. Okay. Hey, no worries. I hope that you guys managed to catch most of it or understand most of it. I hope I was clear enough. Yeah, but no problem. I think I might actually take a long here, very small one, just to test. Oh well, we'll see. This level cannot be taken out. Shit, what's this? This level here. Yep. See, after the spring test is uptrend all the way. Spring test uptrend. Are we going further? I don't know. But maybe, likely, we will need a good pump on the buy volume here. Yeah, we will need a good pump here. But volume is very lacking currently. But this volume was very convincing. Okay. Cheers guys, thanks for attending the stream. Do share the channel, Telegram channel. If you find it helpful or this stream helpful. Probably see you guys again on another trade stream sometime this week or next week. Yep, we'll update the channel. Thanks all for joining. See you soon.